Our headliner today is with us, too, from BMO. So you said that stocks were going to rally on Wednesday the last time you were on, and you were obviously right. But I don't recall you telling me that they were going to plunge then on Thursday.
Well, the stock market is the world's most humbling instrument, Scott, and assets are obviously, the broken clock is right twice a day. The bulls were right yesterday, and the bears were right today. I agree with almost everything that's been said here today. A lot of people don't remember, but 32 years ago when I started in this business, I was a technician, and I learned the business from William O'Neill at Investors Daily. And we're trying to catch a falling knife here a little bit. But I do disagree with Josh a little bit. I do think that you can make some fundamental decisions when you're looking at broader fundamental data like free cash flow and operating performance and balance sheets. I think the market is now turning into being indiscriminately selling everything. And correlations obviously are one on the upside, one on the downside. So now we're starting to create great opportunities. And I think you need to start to distinguish between secular, structural, and cyclical across every sector, Scott. Are you going to be loading up on Apple and Microsoft here? Or are you going to be starting to question Meta? Or are you going to start questioning some of the semiconductors? That's just technology. You can follow that process and discipline across every single sector. I still believe that concentrated portfolios is the way to be. You're going to live by the sword and die by the sword. You lived by it yesterday and you died by it today. But this is about fundamental process and discipline coming the week after the great Warren Buffett's annual meeting. So we should all kind of harden to what he was saying over the weekend.
So as humbling as the markets can be for everybody, not enough to get you off of 5,300, though, on the S&P 500, right? Why? Why? Simple.
Why?
Why?
Simple. Why? Well, you saw that yesterday's reaction and the binary nature of markets, yesterday and today. I still think we can see a binary event that'll shock people to the upside, but it's all about price. We need to kind of flush out some of this every other day negativity, positivity. And like I said on Monday, we could see a positive result to the war. We could see a positive result to inflation. Mr. Powell said himself, we're not going to use 1 month. We're going to see a couple of months. The way that the Fed has operated, he's been very clear, as Leisman said, 50-50-50, and then we don't have a meeting until September. Between July and September, we could see a pretty decent fall off in inflation, which other Fed members are actually saying. And so the bond market's telling you that the Fed is wrong. And don't fight the Fed. And I think the bond market's actually being disrespectful to the Fed. The Fed's the smartest person in the room.
Disrespectful?
I'm going to stick with the Fed.
Disrespectful?
Yeah.
How are they the smartest people in the room? I mean, inflation was screaming in their face, and they ignored it.
Well,
how are they the smartest people in the room?
Well, I don't agree. They're the smartest people in the room because think about what they did in March of 2020 for this country and for the rest of the world in terms of the liquidity, Scott.
They did what anybody would have done.
Number two, no, we didn't do it before in 2008. We made mistakes in 2000. We made mistakes in 1994. We made mistakes in 2018.
From those mistakes, right? They're smart enough to have learned from the mistakes. But they did what anybody would have done.
The bond market is not. The bond market is misjudging the Fed. The bond market is. I think the bond market's ahead of its skis here. I really do. And if you listen to other very smart fixed income investors, they're telling you that the fixed income market is massively oversold, Scott. And so if the Fed came out and said that the neutrality rate is somewhere between 2% and 3%, we're already there in the 10-year Treasury. And what if the market is not thinking about anything I said in the second half? What if inflation rolls over? And if inflation rolls over, this market is going to rip to the upside.